With the soaring energy prices, we all have the question, is this going forever? What can we expect? Currently the barrel at $115. So this is really a hot price on the top side. And is this the end, or can we expect a down move now? Let's have a closer look. Stick with me and I will show you. Yeah, well, the situation may be clear as mud as the crisis and the war in Ukraine is, of course, giving us an impact on the energy prices. You can see that we've seen a really strong move to the upwards, especially at the past end of the last part of the chart, that the prices went up really, really strong. And is this just the beginning or the end of the soaring market? Can we expect that it turns? That was the question. But how can we decide this? Can we decide this by charts, really? Isn't it just a question by what the war situation is giving us, what the political situation is giving us? Isn't this a driver of the markets? Yes, of course, it is. And this might sound funny for many of you, because many of you know that I'm a chart technical analyst and a trader. So I have to read the charts normally for my decision making. Why are you talking about fundamental situations? Yeah, well, to be honest, the fundamental situation, especially the geopolitical situation currently, is driving the prices, of course. But what I have my eyes on is the chart. So this is the price action. So this is not so much what my opinion is, how the outcome will be, but what the market participants' opinion is, what the outcome will be. So how do they react? How do they estimate the situation? This is giving me a perfect shot for my own trading, and I have maybe the best aspect to decide whether I would go long or short, or stay at the sideline and wait a little bit longer. So that's what I'm having my eyes on, and I want to do this with you now. But before I do this, I want to give you an invitation. If you're able or willing to watch my German videos as well, maybe just follow the drawings I have here in the chart. Sometimes it's not super important to listen to what I'm talking about. Sometimes even seeing my drawings is maybe help enough for you to follow my idea in the market. However, if you want to follow this, I will post a link here for my latest video on DAX, and I will do another one for my latest video on gold. So if you like to follow, you have this in the description as well. So let's have a closer look at these energy prices, and we will start with crude oil. In this case, I will take care of the light sweet crude oil, which is the future called CL. This is a symbology for this crude oil future. In this case, it's the April contract, the latest one, CL, or you can also have alternatively the QM, which is the mini future. It's roughly the same. It's just in a smaller size, maybe a little bit more convenient for some of you. And you can, if you don't want to trade the future markets, and if you're able to, you can of course trade any other product maybe named like WTI, which is representing the same oil contract roughly. It is not like the European, the Brent. It is a completely different one. The idea behind that might be similar, but it's a different market, a different type of oil. So this is a different contract in this case. So sticking with this CL contract in this case, we can clearly see, for example, in the daily chart, especially in the daily chart, that the last few days here have been really, really strong, even gaining momentum after a strong market throughout December and January, hold maybe a pause in February, and after that, with of course in connection with the Ukrainian conflict and war, we see that the prices were going up really strong in this case. So can we expect that this will continue? And if you see my numbers here in the chart, you may have the opinion already that this might come to an end soon, and I will tell you why there are some chances for this. Not necessarily, if you see the weekly chart, this will stop the bull market forever, but maybe it's giving us a little breather, some pause before the market is gaining momentum again to the upside, which is quite possible and typical in my eyes. It's not 100% sure, of course. Nothing in the markets is 100% sure. But this is something you can really expect. Why? Yeah, well, because the overall pattern which I drew here and which is giving me some idea what the market is or did so far, seemingly is giving me the indication that everything from end of November or beginning of December, you can see exactly here that part of the chart here in the daily chart. This part here is that part here in the weekly chart in the overall picture. And you can see this might be the first wave of what we've seen here before. So it might be something like, let me draw this here in this part again. Maybe, oh, it takes some time, forgive me. So the first wave to the upside. Yeah, this is completely not working like I wish to. But you can see this is maybe exactly the same pattern like we have seen here. The first one, an ABC to the downside, a continuation to the upside. And this might be of the overall of this ending pattern here, the third wave or C wave to the upside now. So this break here might be a little bit similar to this break here. Maybe size might be similar because it's the same, let's say, level of wave pattern here. It can be a little bit bigger. If it is a little bit bigger, it might be something like a setback, let's say 38.2, which is roughly $95 per barrel, which is also, you can have these mid-February levels here, the top side here. This might be, let's say, the upper side of a typical corrective pattern. It might be a little bit more, 50%, even 61.8%, maybe depending on the political situation. And of course, the politics and the decisions there will give an impact on the market. But you can see by size what the market participants are thinking about this. We can just keep in mind the first one here was also going down, but not completely reaching 38.2. So we may expect that even this one, even coming down a little bit, not necessarily needs to reach this one, but this is way in a quite high probability. This has to do with all the probabilities. If you see some second wave, so if you want to measure how far is this going typically, you can see this probability range here, and you can see sometimes even 25%, for example, not necessarily 38.2%. On the other side, for me as a trader, in my decision making, if I choose 20% is okay because we are at the red area here, so this seems to be quite high probability. Yeah, this means that the whole area behind 20, which is roughly 80% of probability, is speaking of a continuation of the setback. So it's not very smart to jump into the market too early because of thinking, well, sometimes 20% is okay, because the chance that the market will continue this decline is way bigger. So I normally try to jump in when the market is somewhere around 38%, because this is half of right side and left side. So the chances from here are 50-50 that this is the lowest point. And if you have a 50% setback, it is even more or higher probability that you have seen the low already. So this seems to be a better point to enter the market. While here you have to accept, if I'm entering, for example, after a 30% drop, you have this area of probability, and you can easily see this is way bigger than this area of probability to that the market needs some further drops or further declinings before finding the lowest turning point here. If you want to see more on this, I will post a link on this video as well at the end of this video, and you can of course watch this, and you can see how we see this or how we read this areas and the probabilities here out of this. But let's stick with the chart a little bit more. So it is not 100% sure how big this is. You may expect something around this area. For me to start any action, I would prefer that the market is reaching somewhere this area here, so a little bit lower. And this is really important. I want to have this in a corrective pattern, which might be something like back and forth, or at least an ABC pattern, because this is the minimum requirement for a corrective pattern. You can see it here, for example, it looks like an ABC. Some people are thinking this is back, forth, back, forth. It's all the same. If you have something like an ABC pattern, this is not the most typical trend direction. It is more like a corrective, a counter trend pattern. So if you see something like this, you should feel that this is a corrective pattern, and when breaking the intermediate highs, you can keep up with the long position, for example, which was, for example, here at that point, which was maybe here at that point, and others in the past. And this is also on the lower time frame. We will talk about this in a few seconds. So this is my idea. In case the market is coming down, I would normally currently expect that this is not necessarily turning down the market for a really, really strong setback. I would only expect something like a breather, something like a, let's say like a corrective setback in a bull market, which may lead us to 95, maybe even 90, even 85 is something I would not suspect currently, but of course it's okay. It would not kill the bullish stance of the market currently. But why are you talking so much about markets going down? Isn't this a strong bull market, what we've seen here? Yes, if I only have a look at these charts here on the weekly chart, I don't see any chance that the market is turning around here. No. Why? There's nothing which is seemingly turning the market. Some people are thinking, yeah, we have just overshooten some older highs here. Yes. And this is typically giving the market a chance for a turn. Not necessarily a promise, but it is giving us a chance for a turn. But this is not my focus in this case. Even the daily chart is not giving me a strong indication that the market will turn now. But the intraday chart is giving me some indication. So what we see here, this is a complete situation here in the daily. Exactly the same in the 4-hourly chart. You can see this is way more candles, or in my case bars. Of course, you can also read this with candles, the same situation. So let's zoom in a little bit and just focus the last part of the chart. And you can see that after this corrective pattern we've seen here, which might be a little bit different from what I've drawn here. It might be something like this here as well. It's not super important how to count this in this case, which is giving us the indication that what we've seen here seems to be something like a 5-wave pattern with some kind of smaller and bigger corrective patterns. For example, this might be this one, this one, this one, and this one. And on a bigger scale, maybe something like this ABC pattern here, and you can see we have something here currently the same size. And then the last one, which might be, these are some examples how you can count it. Some people, you know that I'm really like the Elliott waves, and some people are telling me, yeah, but you can count it in many different ways. Yes, that's absolutely true. Is this an advantage or a disadvantage? Well, as I think, it is not a disadvantage as long as the outcoming of most of the countings is leading us to the same conclusion. So even you could see that I easily, you can push it here, maybe this is also good, or you can draw it here like this, or a little bit different in another way. This is completely not really on the spot. This is how you have to count it. No, it's not. There are many ways to do so, but they all are giving us seemingly the same indication that this market is coming to an end to the upside. Not necessarily that this high will stand. It is possible that we have some last part here before this happens, before this cycle here, this impulsive move here, which is typically always in a 5-wave pattern. You can see 1, 2, 3, 4, 5, and also internal 1, 2, 3, 4, 5. So in the bigger picture, we've seen just something like here. And maybe we are here, so we see this last part, or maybe we are here, so this is over and we can expect the down move what I've drawn before. So this is not 100% sure from this part. So we have to go even further into more detail and see what we see now in a lower time frame. For example, the 15-minute chart. And even if you're not interested in trading the 15-minute chart, because it might be too short notice for you, and you say, yeah, no, I don't have the time, or I'm not willing to have an eye on the market in the 15-minute rhythm. I can absolutely understand this. I would not like to do this as well, especially not at nighttime. However, I can just watch this chart sometimes throughout the day or throughout the week, just to see how things are changing. If you see this 50-minute chart, you may have realized that this part, which was really strong, you had some setbacks, but most similar sized setbacks were not overlapping. You can see there's a lot of space in between them, or sometimes not a lot of space, but sometimes similar size. They are not overlapping so much, so they are giving us the strongest indication for the movement. And this ABC pattern here, for example, please remember, ABC is a counter movement. And if you would say, yeah, but I would never think this is ABC, I would always say this is a counter trend. Counter trend is back and forth, back and forth, back and forth, or ABC. This is not ABC, but this is obviously in the aftermath, it is counter movement, counter trend. So it needs to be corrective, but this cannot be corrective because it's not a three-wave pattern. So we need something which, this is leading us to a three-wave pattern. So this seems to be the corrective pattern. So we have a size of a corrective pattern which may be fitting to this one. So we have something like the first wave up, second down, some smaller waves here with an internal pattern, a fourth wave down, and now the last wave here to the upside. You can see how it is, how we can see this, not giving you, this is the only way to count it. But if this is the end of this movement, we need something new, which might be something like an ABC pattern to the down. Wow, we can continue to the upside because this is an ABC pattern, which is corrective pattern and counter trend. Yes, that's absolutely true. However, if this is the corrective pattern of all this, it is either, well, you can say it is okay from size because it's 38%, but it is not from duration compared to this one in any way fitting. It's a little bit I overstressed this a little bit. It's a little bit longer, to be honest. But roughly this one, this is the size of the corrective pattern, and this one, no, this is not really typical. So I suspect with the current situation is something like a corrective pattern which is not over yet. And what is giving me the indication for this as well is what we've seen here. This is a bull movement because the market is going up. Is this a strong movement to the upside with so much overlapping here? No, not really. Of course, as long as the market is going upwards, shaky to the downside, pushing through the intermediate highs, it is not something you can short. However, when the market is coming down again, breaking intermediate lows, this is giving us the best indication that this is not the bull market. So breaking through intermediate lows, for example, this one here, which is currently at the weekend time, it's roughly 110, gives us a good indication that we can expect even more pushing through this one, and maybe in the bigger scale some more down movements here. So it seems to stick with a corrective pattern here for that time. Only when the market is staying above this level here, we cannot, or we should not sell short the market as long as that happens. Only if the market is giving us something like a strong movement to the downside and is shaky to the upside, you can trade at least the continuation, similar to what we've seen here, and roughly similar to what we have here, again to the downside. So if you have something before this corrective pattern, you can just transcript this to the end of the pattern and say, okay, this is the minimum movement. And if you can estimate that this entry will lead you here, which might be below this point, then you may enter the position here expect way more to come. So you can, of course, read something from the small picture, even if you don't want to trade on a 50-minute base. I can absolutely understand this. And for many of our clients, we don't do this either. So it's okay for us if you don't like to trade the 50-minute charts. But if you want to have an idea what the market is doing, I think it's absolutely valuable to see what the market is doing on the lower time frame as well. So what I see from this chart is that not necessarily at the very moment the market has a good chance to turn around. It seems that this is not something which will collapse the oil price or the energy price market. No, I don't think so. I think the better chances are that we just see something like this here, counter movement in the bull market here, so that we have a continuation after that to the bull side. However, I would prefer to see that the market is coming down soon. Maybe we will have some, maybe last more time above this last time here, above this 116 or 15 or 16, whatever it is. And after that, we will see this pattern. So this depends on what you see here, whether we have some breaks on the lower side. As long as we don't have, stick with the bull side, but expect that the market on the bull side may come to an intermediate end soon, having a break, having a corrective pattern, and after that we will have a chance to re-enter on the bull side depending on the situation. Then we will talk about this in the near future. So the next I want to talk with you is natural gas. But before I do this, I know many people are wishing for some contracts we should talk about, or some stocks. And I want to do something new here on this channel. If you want to place some comments below, for example, wishing for a stock, wishing for a market, for a contract, whatever it is, or for other things, if you say, I definitely want to learn more about this or that, please write it down in the comments. And to all the others reading the other comments, please vote if you like it. And as many votes as I see, I can see, okay, this is more important for the whole of you. So I would have an eye on this one, so you can wish for something. And the more thumbs up a wish has, the higher the chances is that I will bring this up in one of the next videos. So try it out, type something here, wish for something, and I will keep this in mind for the next few videos. So now let's go over to the natural gas situation, which is a little bit difficult or different especially. Many people are thinking, yeah, well, this is also an energy market, so it needs to have the same reaction, the same price action here, but it is not true. It is completely different in this case. What you see here is gaining market from end of December. It is, you may remember, the oil prices, the oil market was going up from early in December or end of November. But you see natural gas only started in December, and you see completely different way of moving. And this is really important. Many people only have the price difference in mind. But for me as a trader, I'm not only interested in the difference. Of course, I want to earn the difference, but I want to see how the market developed there, to see how strong the market participants believe in what they are doing. And to be honest, the overall idea of this movement is nothing I would say is a bull market movement. This has so many corrective and strong corrective patterns here, or counter movements, that's maybe better, counter movements here in the market, that I would say that the overall movement here is not giving us the strongest idea for a bull market. It is not 100% sure, of course, never. You can never say, okay, absolutely, I'm absolutely sure we will see this next time. But this is not giving me the same positive mood for this price indication like we've seen in gold, in the black gold, in crude oil, for example. So what can we expect from what we've seen here? Currently, if we have a closer look at this very end here in a 4-hourly chart, for example, I think this part looks quite nice because the first part was strong. We had something like a corrective pattern here. This clearly looks in the corrective pattern like. And now we are in an up move. And normally and typically, I would expect more. Let's try. The market is doing the same here again, continuing here to the upside, maybe leading us to 5.3 or something like this, which is would be a really typical target for this first way up, corrective pattern down, third way or C wave to the upside. And to be honest, from that very point, normally I would say there will be decided whether we can expect this, a continuation to the upside, or a turnaround. So whether this is an ABC pattern, or this is a first, second, third wave, fourth wave, and another fifth wave to the upside. But in this case, having the overall picture in mind, to be honest, I doubt a little bit that this is the case in this case. I'm not sure. To be honest, still the decision making will be around this level. Keep in mind roughly 5.3, can be 5.2 as well, or maybe even now from that point. But I think roughly in this area here, we will get the indication what the market is doing next. How can we read this? What can we expect on that? If the market now, from now on, anytime, or maybe in this box here, what I've drawn before, if the market is now turning around sharply and coming up in a corrective pattern, roughly the same like we've seen here in an ABC pattern, you merely cannot see this here, or cannot see this easily here in a 4-hourly chart. But if you see something similar like this, you can expect the continuation here. And this is always also breaking this level, which is always indicating, this seems to be the end of the bull market, the corrective pattern like bull market in this case. And we can expect not only a break through this one, not only a break through this lower trend channeling, we can expect something like this and even like this, so that the market is reaching this. But is this realistic in the current political situation? Well, to be honest, I don't know that. On the other side, we see that we had already some different price movements here from the oil market. And you must not forget that the political situation, for example, especially in Germany, which was linked with the Nord Stream 2 discussion, now we are not getting the Nord Stream 2. So the question is, will we get any gas anymore, any longer? Will this inflict the change in the natural gas situation? Will we get other gas? Liquid gas from America, for example. I read an article about Japan wants to send to Germany, which I doubt it, to be honest, but it was in the Nikkei Shimbun, a Japanese newsletter which is quite famous for that economical story. So I think there are many things coming up newly now from the changed situation, so that we are not absolutely sure what we can expect. So I would not doubt my own opinion. I would only trust the ideas from the market participants, what they are doing overall. So I think this may give us an indication for that as well. So please expect here around this area, we are quite near this hot area, 5.1, 5.4 maybe even, around this level. If you see some turning there with strong down movements and shaky up movements, this size might be different from what I've drawn, but the pattern should look quite similar from what I've told you here. If you see something like this, you can expect that when breaking through all these levels, eventually we will reach this level here down below, which is roughly 3.5. and even a little bit below. From then, in the big picture, it might be that from then we will have a continuation. This is open now. I can accept an idea like this, but currently this is not giving me the best influence for, or indication for buying the market. However, in case the market from here on is giving us a clearly corrective pattern, which may look something like this, and breaking through the intermediate highs, what will I do? Yeah, of course, stick with the trend side, which is on a lower time frame at least a strongly bull market here on a lower time frame, and this is weaker. So when breaking through this level, I want to buy and stick for the bull market at least a little bit longer. So you can see the situation is a little bit different in the markets. This is not only in this case, you also have this in the indices currently, for example with the German DAX, which is completely different from the American market currently. If you're interested in this market as well, if you want to see what the DAX is giving us, I think we have a better chance than ever to see 8,000 and below. This is not a promise, please don't panic at that point, but a door is now opened, a chart technical door, which is really typical and discussed by me or from me in my video I have uploaded recently. Unfortunately, it's in German language. A link is coming down below this video, and if you want to follow this, try it out. Maybe it's easy for you to understand anyway, just by seeing what I've drawn there. So if you like this video, please share it, give a thumbs up, and press the subscribe button. Whatever you like, I want to see your success in the markets. Crossing my fingers for you for the next few days. Seeing you soon. Bye bye.